Hello everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So Peter, what's new in the markets?
Well, we had yesterday a drop of the US dollar against some of its counterparts. We must note that the market's hawkish expectations seem to have cooled down just a bit. Uh, there were some expectations for an outsized rate hike in July of one full point, that would be 100 basis points. However, that seems not to be so much priced in right now. Market seems to be expecting a 75 basis points rate hike, a scenario which had been mentioned also by Fed policymakers in the past. So that could have driven the US dollar a little bit lower. And we must note that the drop of the USD seems to have continued also during today's European session, at least in the early stages of the European session. So we see the case for the USD to maintain its downward motions for today. I would also note, though, that US stock markets turned lower despite some gains made. And I would note that we had Goldman Sachs's earnings report, which, okay, more or less exceeded market expectations, but nevertheless, in comparison to other quarters, it has dropped considerably, nearly halved its profits. At the same time, we had similar readings also from Bank of America. And I would note that also IBM yesterday, which also released its earnings report for quarter two, had warned about future cash inflows. So that was another negative sign for US stock markets. And to top it all, Apple announced a slowdown in hiring and expenditure for certain divisions. But still, that didn't exactly excite traders. On the contrary, it was quite worrisome. So we want to see also how today's earnings releases are going to be, to see overall how the market sentiment builds up.
And what are to be today's earning releases?
Oh, the earnings releases for today, we note a number of them, but we would highlight practically, I would be highlighting three. The first would be Lockheed Martin. The second would be Netflix. And the third would be J&J. Should we see, I would dare to say, a more cautious sentiment building up because may not have reached the targets, that could weigh on the stock markets. I would be highlighting for Netflix in particular the number of subscribers, of new subscribers. Should there be a new reduction, that could weigh on Netflix's price.
Okay, and how about gold price?
Well, gold's price, despite the weakening of the US dollar, which under other circumstances could have driven gold's price a little bit higher, it didn't. For the time being, gold's price remains in a tight range bound movement, and that tends to more or less, I would dare to say, overturn the traditional negative correlation which the US dollar bears to gold. So I would expect practically gold traders to remain rather cautious. We may see bearish tendencies once again rising for the precious metal, which could drive it even lower below definitely the 1700 support level.
And Peter, on the commodities front, are oil prices still on the rise?
Oil prices were on the rise for the past 2 days. I would note that there may be some supply worries here for the commodity, given that we may see further tensions in the war of Ukraine practically tightening the supply further, but also the lack of additional capacity by a number of OPEC members in conjunction with other OPEC members which have problems in the existing production levels. That could drive oil prices a little bit higher. And I would be highlighting also the financial releases regarding the oil sector in the current week.
And what do we have on the calendar regarding upcoming releases?
Well, we already had, let's make a start with UK's employment data. They were for May, and we got a surprise there. It should be noted. We had practically the unemployment rate, which remained unchanged at 3.8%. At the same time, though, the employment change figure jumped and jumped considerably, reaching over 270K. It was expected to remain at 177,000. It didn't, it rose, and the earnings growth rate tended to slow down. Now, how do we actually read this data? That would be, on the one hand, that the UK employment data continues to tighten, and that was indicative practically from two indicators. The first was the unemployment rate, which remained at rather low levels. It did not tick up. And the second was the increase, the substantial increase of the employment change figure, which means that the UK economy is still generating jobs, which is a positive for the employment market. On the other hand, wages, which tended to feed inflationary pressures in the UK economy, may have slowed down just a bit. Thus, we may see practically that part of the inflationary pressures slowing slowly down. Other than that, I would also note that we must have had actually right now the release of Eurozone's HICP rate. That was for June. It's the final rate, and is expected to confirm the acceleration noted in the preliminary rate. So that could provide some slight support for the euro. We must note here that we have also in the American session the release of the US housing data, the building permits and the housing starts both for June. And just before the Asian session starts, we note the release for oil traders mostly of the AP weekly crude oil inventories figure. Should there be another buildup of US oil inventories, possibly above 4.7 million barrels, that could be signaling that there is a slack in the US oil market and could have some bearish tendencies on oil prices.
And anything on the monetary front?
Well, we have in the American session today BOE Governor Bailey. I would expect Bank of England's governor to stick to the script and actually maintain the idea of 25 basis points rate hikes per meeting. That could weigh a little bit on the pound, as practically the market may be pricing in wider rate hikes, at least a part of the market is. I would also note from the Fed, which is it? No, it would be Brainerd, Lael Brainerd, which could be making some hawkish comments here. And should that be the case, we may see the US dollar gaining. During tomorrow's Asian session, we get from Australia RBA Governor Philip Lowe. Now, RBA's governor is expected to maintain a rather hawkish tone, given also RBA's latest interest rate decision in early July. And if that's the case, we may see the Aussie gaining somewhat during the Asian session tomorrow.
Any final comments, Peter?
Well, I would be highlighting the common currency which has been strengthening substantially against the US dollar in today's early European session. However, we may see the pair rising practically on two fundamental reasons. On the one hand, we have a weakening US dollar, which we explained earlier on. But on the flip side, we have a common currency, which seems to be getting some support from market expectations, as ECB may be considering also a 50 basis points rate hike in the July meeting, despite ECB officials clearly stating that we shouldn't expect nothing more than 25 basis points rate hike in the past. And that could be followed by a back-to-back 50 basis points rate hike in September. On the flip side, though, the euro may weaken somewhat given that the economic outlook of the eurozone darkens, especially given that Gazprom yesterday halted the supply of natural gas to Europe. And despite the move being politically motivated and showing practically the leverage which Russia has on Europe on the energy field, I would still note that it darkens the economic outlook of the Eurozones even further. And that does not seem to be great news for Euro traders overall. Other than that, I would like to see how practically the US session is about to open, especially stock markets, given that we have already behind us most of the banking sector's earnings releases, and we are more focusing now on industry-based companies. That would be Netflix would be an exception, but still. And should the market sentiment actually be maintained on the positive side, or if you prefer, revert back to the positive side, that could provide support for US stock markets in the next 24 hours, most probably.
Great. Thank you, Peter, for your time and everyone for watching. Join us after a short break for technical analysis with Peter Yosif.
So welcome to the technical analysis part of the presentation for today. We make a start with the USD index. It's the 4-hour chart you have on your screens, ladies and gents. The first element which I would be highlighting would be practically the drop of the USD index, which was marked during today's European session, practically abandoning any attempts on the 107.50 resistance line, which were made in the Asian session earlier. I would expect the index to move lower despite some correction being possible. Also note that the RSI indicator has reached the reading of 30, more or less implying that there is a bearish sentiment for the index in the market. On the other hand, we must note that the price action of the index has reached the lower Bollinger Band and is currently correcting a little bit higher as it has broken just below it. Overall, though, we tend to maintain a bearish outlook and we may see some correction higher, yet overall I wouldn't be surprised to see the index dropping on a technical level, breaking the 105.55, which used to be a resistance line, and that was around mid-June, and actively start aiming for 103.20, which used to be a support line, actually the lower boundary of the past sideways movement, which characterized the pair from around the 10th of June up until the 1st, 2nd of July. On the flip side, should a stabilization take place, we may see the price action moving between the 107.50 and the 105.55, somewhere here. While if we actually zoom out into the daily chart, we can see a clear upward movement, which could be characterized by an upward trend line, something like this. Let me make it more clear. and seems to be intensifying. Yeah. And we can see here that the index has been on the rise and has been on the rise since around the mid of February 2022. It's characteristic how it marks higher peaks and higher lows, shows practically. And I wouldn't be surprised to see it reversing direction by the end of the week once again, once it hits the 105.55. Quite interesting. Let's have a look at the 4-hour chart once again. So should the bulls actually take over and reverse the index's direction, we may see it breaking the 107.50 and start aiming for the 109.50. Quite interesting chart. Let's have a look now at Euro USD 4-hour chart. Once again, let's make a start this time with the daily chart. A daily chart which, let's correct this. There you go. So you have a downward trend line. These are no longer necessary. And let's drill down to the 4-hour chart, readjusting the upward trend line. Note the stark upward motion, which was made practically in today's European session. And we're going to have to proceed with necessary corrections here, given that it has broken the 1.0210 resistance line. Let's turn it into green. Here. I would be placing it a little bit lower. Here. So we have one attempt, second attempt, false break, and the third attempt. This should be valid. And that would be, let me change this in red. Sorry. That would be, ladies and gents, the 1.0605. Resistance line. Let's make the readjustments on the labels so it's more visible. Let's open this up. Okay, it's actually quite nice to see the price action placing some distance. That's 1 too many. Placing some distance between the parallel level and its price action right now. 0.10. The S1, the first support line, is the 1.0210. Used to be a resistance line, but given that the price action has broken above it, it's now turned to support line. First resistance line now is being placed at 1.0355. Second resistance line being placed at 1.0485. And the final resistance line being placed at 1.0605. There you go. So the pair has still some way to go upwards. On the other hand, I would be worried a little bit about breaking the upper Bollinger Band, but let's give it here a big look. The big picture shows us that the pair has, in the daily chart, a clear downward motion. That should not be neglected at any given circumstances. And should the downward motion follow the downward trend line which we have marked and drill into the forward chart, this allows the pair to rise up until the downward trend line before it corrects lower, yet that could happen earlier. For the time being, the main element which we have to keep in mind is that the pair has been on the rise and has been on the rise since the 14th of July. That was Thursday. Now, should the bulls maintain control, and we tend to expect that the price action will continue to move higher as long as it remains above the upward trend line, we may see the price action aiming, if not breaking, the 1.0355, which used to be a support line and has now been turned to a resistance line. Overall, as long as the price action remains above the upward trend line, which has started to form since the 14th of the month, we maintain our bullish outlook. On the positive side, the RSI indicator has just breached the level of 70, which more or less tends to reaffirm the bullish sentiment. On the flip side, though, may also imply that the pair has reached overbought levels and may be ripe for correction lower. That shouldn't take us by surprise, and I wouldn't be surprised to see the price action dropping, but I would expect it also to respect the upward trend line, which we have just noticed here. We have similar signals coming out of the fact that the price action has broken just above the upper Bollinger Band and seems now forced to be correcting a little bit lower. On the other hand, should the stabilization take place, we may see the price action revolving around the 1.0210 or even just above it and breaking the pre-mentioned upward trend line, yet stabilizing in this area. Should the bears take over, we may see the price action dropping, breaking the 1.0210. Definitely, we would require a clear break of the pre-mentioned upward trend line and the price action to move lower and start testing the 1.01 support level. Let's have a look at GBP USD for our chart. GBP USD, which has also been on the rise. Note once again that the price action has moved intensely higher during today's European session and is currently correcting lower. We maintain our bullish outlook for the pair. This is cables for our chart. And we expect it to correct a little bit lower given that it has hit the upper Bollinger Band. Note that the RSI indicator has not reached the 70 level yet, so that would imply a bullish sentiment of the market given that it remains at pretty high levels. It's currently at 65. Should the bulls maintain control, I wouldn't be surprised to see the pair reversing a similar movement like it made during today's Asian session, correcting lower yet respecting the upward trend line, and regain momentum, starting to aim, if not breach, the 1.2070 in search of higher grounds. Should a stabilization take place, which for the time being is not our base scenario, or base scenario is for a bullish outlook, we would expect the price action to correct lower, break the pre-mentioned upward trend line, yet respect the 1.1935, which provided support here and here and here. So it's pretty valid. And I would expect in a sideways motion the pair to maintain a range-bound movement between the 1.1935 and the 1.2070. In case of a bearish movement, we may see the price action of cable breaking the pre-mentioned upward trend line That would be the first signal, if you prefer, for trend reversal. Break the 1.1935 support line and aim for the 1.1815 support level. Okay. Let's have a look now at USD JPY, which moved decisively lower. Note that there was some support at the level of 138 here, but the price action moved lower and is now forming a clear downward trend line like this, which becomes more obvious if we drill down to the 1 hour chart. Here it is. This trend line now becomes obsolete, so we delete it. The downward trend line is guiding the pair. It intensified the drop during today's European session. Let's make the readjustments and see what levels it could go. Now, should the bears maintain control over the pair, we may see the price action aiming, if not breaking, the 136.75, which provided support here, resistance here, and here. So that's pretty valid as well. And start aiming slowly but steadily for the 134.45. Now, the fundamentals could change. And there is a possibility that JPY may start weakening as the market may start positioning ahead of BOJ's interest rate decision. That would be on Thursday, early in the Asian, actually in Thursday's Asian session, most probably in the late Asian session, but still. And should the bank be expected to maintain a very dovish stance, that could weaken the yen somewhat, which could lead to some stabilization of the pair. A stabilization, though, would require a clear breaking of the downward trend line we have just drawn, and the pair to remain between the 138.50 and the 136.75. Albeit we have to note that volatility has been low for the pair in the past few days, so it could actually remain at an even tighter range-bound movement. On the other hand, should the bulls take over, I would expect the price action to reverse direction, break the pre-mentioned downward trend line, definitely break the 138.50, and start actively aiming for the 140 resistance line. Albeit here, I would like to make a change. Let's have a look. Yo. No, I'll keep it here, 138.50. Suits me more as a resistance line. And should the bulls be able to break the pre-mentioned downward trend line, break the 138.50, we may see the price action starting to aim for the 140 resistance level. Once again, our base scenario for USD JPY remains a bearish outlook, given the downward trend line, which is currently guiding the pair. One element. Second element would be the RSI indicator below the 4-hour chart, which has a downward slope and has currently broken below the reading of 50. And the third element would be the price action, which seems to be flirting with the lower Bollinger Band right now. It's interesting how the price action has crossed practically from the highs of the upper Bollinger Band to the lows of the low Bollinger Band, which may provide some stabilization here. Let's have a look now at USD CAD. USD CAD, which bounced on the 1.2935 support line once. It was retested during today's Asian session, if not the early European. Let's have a look. Yep, early European session once again. But there are still some bearish trend. I wouldn't say, yeah, why not? Let's draw this. Let's drill down to the 1 hour chart. Yep. I would take this peak. There you go. See how the downward movement in the 1 hour chart is clearly described. Correction higher, still respects the downward trend line. Corrects lower and seems about to stabilize just above the 1.2935 support line. So we have some tendencies of stabilization. For the time being, though, I would expect the price action to remain in a bearish movement as long as it remains below the downward trend line. I wouldn't be surprised to see the stabilization, though, shift the downward trend line to the right a bit. Also note that the RSI indicator has clearly a downward slope and is currently below the reading of 50. Actually, it's at 39. And that's another indication for the presence of the bears. Also note that the price action has still some room to move lower till it hits the lower Bollinger Band. So overall, we tend to maintain bearish for the pair. And if that's the case, we may see the price action breaking the 1.2935 support line, which provided support once, twice, 3, 4, 5, 6 times, and support here and here. So it's pretty valid. No wonder it has difficulties in breaking it. In which case it may break the 1.2935 and start aiming actively for the 1.2835 support level, which provided support mostly here, but was also tested and for a short while breached around the 28th and 29th of June. On the flip side, should a stabilization take place like in this area here, we would expect the price action to bounce on the 1.2935, correct higher, break the downward trend line, and start actively aiming for the 1.3075. It's characteristic how the price action has moved in sideways motion in this period here. That would be since the 5th of July until the 14th of July. A bullish scenario, which doesn't seem probable for now, but still would be a possibility and should be mentioned. As a first sign of a bullish scenario, we would expect the price action to break the downward trend line to the upward. Yet we would also require the price action to break the R1 1.3075 and move out of the sideways boundaries it used to have and start actively aiming for the 1.32. Once again, for the time being, we maintain a bearish outlook for USD CAD as long as it remains below the downward trend line, which has started to guide the pair since the 14th of July. AUD USD in an upward motion, yet some adjustments are required here, like this. And it has broken above the 0.6875 resistance line. See the break here? So we switch our bearish outlook in favor of, so we switch the resistance line into a support line. Let's do that. And let's go hunting for a new R3 resistance level. That would allow the price action to move lower. So we have support here, here. This looks pretty valid. Let's stick to this. Despite this false break here and here. What level is this? This would be in red 71.55. We had touches here, here, aimed for, broken, tested. This looks pretty valid. I'll keep it. And let's readjust the labels as well. Final support line being placed at 0.6715. Second support line being placed at 0.68. First support line now used to be a resistance line, now turned to support line, given that the price action has broken above it, would be the 0.6875. First resistance line being placed at 0.6995. Second resistance line, based practically on the peak here, would be the 0.770. And final resistance line, which used to be a support line, you can see the latest touches here. It's going to be placed at 0.7155. Locking the labels. So, given that the pair had AUD USDs for our chart once again, given that the pair had a clear upward motion since the 14th of July, once again, we tend to maintain a bullish outlook for the pair. Also, the RSI indicator, which has reached the level of 70, seems to imply some bullish sentiment for AUD USD of the market. And as long as it remains above the upward trend line we have drawn, we maintain a bullish outlook for the pair. In which case, we may see the price action rising and aiming for 0.6995. I wouldn't be surprised though to see it correcting a little bit lower, given that it has just broken the upper Bollinger Band, or stabilizing for a while. Nevertheless, the main issue here is whether the upward trend line is going to be respected or broken. Should it be broken, that could be signaling the possibility of initially a sideways movement between the 0.68 and the 0.6875, while should also the 0.68 S2 support line be broken and the pair moves towards the 0.6715, that could force us to adopt practically a bearish outlook for AUD USD. Let's have a look at USD CHF as well. USD CHF, which has moved decisively lower in today's European session, abandoning any hesitation and revolving around the 0.9765, and it's now clearly aiming for 0.9640. Note also that the RSI indicator is approaching the reading of 30, so we may be having here a downward movement with one peak, second peak lower, and we wouldn't be surprised to see the price action of USD CHF starting to aim at 0.9640. So a bearish outlook is expected as long as the price action remains below the downward trend line. I would like to see though more touches on the trend line verifying it, We had only 2, the initial point, and 1 confirmation, so it's a little bit fresh. But once again, bearish tendencies could be leading the way here. Should a stabilization occur, I wouldn't be surprised to see the pair stabilizing between the 97.65 and the 96.40. Albeit it's a little bit too wide, and we may see the price action finding some support at the current levels. That would be the 0.9691, given that we have these peaks here, which more or less tend to imply some resistance here. On the other hand, should the bulls take over, we may see the price action reversing direction, breaking the pre-mentioned downward trend line. Definitely, we would require clear breaking of the 0.9765 resistance line and the price action to start actively aiming for the 0.9860 resistance level. That could be building up a bullish outlook for the pair. Let's have a look now at gold's price. Gold, which practically has remained surprisingly stable. And I'm saying surprisingly stable because we would expect the drop of the US dollar to provide some bullish tendencies for the precious metal. It did not. Actually, there is some stabilization, and it's more clear to see if we drill out to the daily chart. You can see how low volatility has been for the precious metal over the past 2 days. And that was practically on Friday, Monday, and today when we have a little bit of an edging upwards. But for the time being, we have to correct this and set it as a resistance line. Let's correct lower and go hunting for a new S3. An S3 which seems to be validated on the 21st of April 2020, my lord. It's been 2 years plus. Okay, let's do this. In green, and that would be the 1660 support level for our chart. Here we go. So for the time being, we see, we have to correct the labels as well. Give me a sec, please. 16 point, cancel. Let's go from top to bottom. Now the final resistance line is being shifted to 1752. The second resistance line is being placed at 1731. The first resistance line is being placed at 1715. The first support line, on the other hand, is being placed at 1700. Nice round figure. It was tested 1, 2, 3, 4, 5 times. Second resistance line being placed at 1678. And the final support line being placed at 1660. Note how volatility has been low for the precious metal as well. And the price action seems to be revolving practically around the 1715 currently resistance line. Note how it was respected here once again. So we tend to maintain this. But overall, as the sideways movement progresses, I would expect practically movement between the 1731 and the 1700. On the other hand, we have to note that the RSI indicator below our 4-hour chart has a slightly upward motion here. Actually, it would be like here, and then it would be renewed from here to here. So it's not exactly a continuation. You can see how the RSI dropped from the reading of 50, aiming for 30, broken its upward movement, and now has regained that momentum. But the RSI indicator is also still below the reading of 50, or approaching and near the reading of 50 to be exact, but below it. On the other hand, we have a slightly upward slope, so should the RSI indicator break above the reading of 50, correct a little bit lower once again, that would be another continuation, or if you prefer, a reaffirmation of the building up of bullish tendencies in the market sentiment, or if you prefer, that the bears are losing steam. So most probably a stabilization, in our opinion, would be the most probable scenario for now. Mind you that we are about to issue an extensive gold report, and that would be in the afternoon today, which would be including all the fundamentals and technical analysis. Should the bulls, though, take over, I wouldn't be surprised to see the price action breaking definitely the 1715. I would also expect it, or require actually, the price action to break also the 1731 resistance level and start actively aiming for 1752, if not even breach it, for me to say that the bulls are in town. Other than that, some have traded this and consider that there is also still a downward trend line. It's a possibility. I'm not saying no here, because there are some valid touches here, and a false break in my opinion as well. But the fact that pushes me more towards the stabilization rather than the bearish outlook for the precious metal would be the fact that the pair had marked throws here around the 1700, yet the latest throw was a little bit higher, so it actually failed to mark a lower throw. I would require that for the, if you prefer, downward trend line or the bearish outlook to be maintained. It didn't. On the contrary, it seems about to test once again the downward trend line which we have marked, and we have an RSI indicator which is on the rise. So overall, I would expect the stabilization of the precious metal for the time being at least. That should sum it up. From all of us here at IronFX, best wishes for solid trading.
Hello everyone, my name is Emily. In this video we will look at how central banks impact the forex market. When central banks decide to intervene in financial markets and conduct monetary policy to achieve price stability, they do so in line with the specified monetary policy framework. The application of such a policy is highly anticipated by forex traders who want to take advantage of upcoming currency movements. Central banks buy and sell securities to expand or reduce the amount of money in the banking system. They do so via a process called open market operation. Another way central banks intervene in the market is by setting the central bank rate, which is also known as the discount or federal funds rate. The bank rate is set by the Monetary Policy Committee with the intention of increasing or decreasing economic activity and to control inflation. Forex traders can monitor central bank announcements via the central bank calendar or by using an economic calendar. This is available freely on our website under the IronFX School. Central banks set their own interest rate. All other interest rates that individuals must pay on personal loans, home loans, credit cards are based on this base rate. The central bank interest rate is to charge to commercial banks that borrow money from the central bank on an overnight basis. Forex traders closely watch central bank rates as they can influence the forex market. Forex traders often assess the language used by the chairman of the central bank, and they try to detect any clues about the central bank's intentions to raise or cut interest rates. If the chairman uses a language that suggests an increase in the interest rates, then his statement or tone is described as hawkish. If the chairman uses language that can be understood as dovish, then it means that the bank will keep interest rates low or lower them further. These subtle clues are referred to as forward guidance and have the ability to move the forex market. Traders that believe the central bank will raise interest rates tend to place a long trade in favor of that currency, while traders anticipating a dovish or soft stance will look to short the currency. Hope you found this video interesting. Keep watching for more educational videos. Thank you so much, guys. See you tomorrow.
All right, let's begin today's session. Okay, guys, thanks for tuning in nice and early, right? If you're here for the first time or if you're here, there is a chat section. I'm just going to send a message through, right? That is a section, right? I forgot to change my name, right? Just let me change my name. I rename it to Desmond. All right. Okay, yeah. If you're here, there's a chat section that you can there's a chat section where you can just send your messages through, right? And I'll do my best to answer them. Kingsley, the recording should be sent to your email, right? Hopefully you'll be sent to your email, right? I'll need to check up with IronFX on that. But today's session is a very exciting session, right? It's actually going to talk about very, very effective style of trading, a trading strategy which I've used very effectively, right? Made good amounts of money with it, right? And it's a pretty, it puts together what we've learned so far on support and resistance, pullbacks, overlaps, what we learned last week, and we're going to apply it this week, all right? Now, let's begin today's session, okay? First and foremost, of course, disclaimer, everything in this webinar is educational in nature, so nothing should be construed as investment or trading advice. Please do your own little due diligence before you guys trade, okay? Now I see Natalia has tuned in too. Nice to see you here, Natalia. I thought I'll be seeing you in the VIP room. I didn't see your registration come through. I was looking out for you all week, man. Right. But all right, let's continue in today's session. For those of you all who are here for the first time or wondering who am I, right? My name is Desmond Leong. I run the award-winning research firm, Everest Fortune Group, and also the Forex Army, right? Where is my marker? I have a little marker over here. Yeah, so we are finalists for 2019, 2020, and 2021 for Best FX Research, and 2020 and 2021 for Best Equity Research, right? Really strong team of traders, right? And we usually work with the institutions on telling them where the markets are heading, but we have a special partnership with IronFX, where we're bringing you guys the good stuff, the juicy stuff, the stuff that will take your trading to a next level. Right, yeah, Natalia, I'm waiting for you, man. Let me know if you're in difficulties joining the VIP room, all right? I'll give you guys a link to get access to it later, okay? Now, if there's anything I want to encourage you guys that, yeah, you know, I'm a very young guy, 32 years of age, right? And if there's any word of encouragement I want to share with you is that you don't need 30 years in business, right, to be a good trader. You don't need 30 years in Bloomberg to be a good trader. You just need 30 days learning the right stuff. And here at IronFX, we're going to teach you the right stuff on how to be a better trader, okay? But of course, whenever you have questions, please send them through so I can answer them. Otherwise, you know, it's going to be lonely if it's just me talking to myself. All right, guys? So yeah, please, anytime you got questions, just send them through. Now, let's begin today's session, right? I'm going to touch on trend lines, right? The ways we can use trend lines. Then we look at channels, right? Channels are, you know, trend lines are, you know, are up and down. Channels are essentially parallel trend lines, right? There's a proper way to use it. I'll touch on how you can use this to improve the probability of your setups. And I'll be showing you some live examples on some of the calls we did that turned out really well, right? And it's actually a way to apply this form of technical analysis into trading, right? If you apply it properly, trust me, it can be one of the best and most profitable kind of trading strategies you encounter. Okay, now let's move on from here. So just remember, when it's a recap on our last week's session, always look out for significant swings. All right, it's very effective when you're doing trend lines. It's very effective when you're doing channels, right? If you draw a trend line like that, you know, you look at the significant swings. Look at the significant swings, okay? We usually don't try to use the smaller insignificant swings over here. Yep, so these are the insignificant swings. They're not that useful when you plot like little channels here and stuff, right? You're looking for the bigger levels to plot your trend lines, okay? So always keep that in mind. Now, okay, these are significant multiple swings. All right, so this is really quickly what one of the key things I'll be showing you later. Right, we did touch last week on the multiple swing highs, right? Multiple swing highs, when you combine them together, you can find a very nice level of resistance or support. I'll be showing you how you can use this in your trading this week, right? Pretty interesting stuff, okay? Now, let's first look at trend lines. Let's first look at trend lines. Remember, guys, again, I encourage you guys that if you have any questions at any time, please send them right through. I'll do my best. I literally have another screen open here to answer you guys, okay? Now, trend lines, right? So one of the questions that we've always wondered, right, is when you use a trend line, do you use the week or do you not use the week, right? So this uses the week. Some people prefer not to use the week, okay? Now, I'm going to give you guys the answer here is that the when you're drawing trend lines, one of the best things to do is to use the wick, right? So you notice that when you change the trend, when you change the time frame, like for example, if this is the H4 time frame, and you change it to H1, oh yeah, so Techno is asking where people can access my clips on me teaching. That's a good question. I realized I forgot to cover that with you guys, right? I'm gonna show it to you over here. For the upcoming webinars, right? For the upcoming webinars, there's a past webinars and the upcoming webinars. All right. So past webinars is over here. Upcoming webinars is over here on the main IronFX website. Okay. So past webinars, that's me. That's Cass. You might have seen her, right? So this is the if you want, you filter based on English, and you can see all the different past webinars here. It's really, really nice. And you can kind of see what we had taught for the session. You want, you click watch webinar. And there you go, right? It's over here, right? It's a great session.
Consistent.
This was Cassandra.
If you are crossing the.
I kind of thought usually there's usually a recording of self somewhere. Yep, there we go. Okay, so that's where the past webinars are. And of course, you know, if you want to watch, please do sign up for upcoming webinars, right? The upcoming webinars, we have our upcoming webinars. It usually takes a while to load over here. Right, you can click on English, right? And after our session this week, we're gonna have our top price action setups next week. All right. Yes, you can access it on YouTube, right? So this is actually the YouTube playlist, right? And we are gonna click on this button called here. This is the link. This is the link that you want to go to. This is the playlist on YouTube. Okay, so yeah, you know, you can come in here and you can watch the webinars over here. Okay, pretty good stuff. I think it's you just need to watch each and every one, right? So like last week's session, some pullbacks, overlaps, and swings, you know, you can check it out over here, right? So anytime I'm referring to my previous webinar, you can check it out over here. Okay, guys, I hope that answers your question on where you can find it. Okay, now let's go back to today's session. All right, let's go back to today's session. Okay, so like for example over here, H4, right? When I change it to H1, right? For example, if I change it to H1, you notice that there is all the different bounces that happen over here. It is the same bounces that happen over here, right? And that is because we take the wick, right? If you don't take the wick, in this example, right? This is when we do not take the wick. That's where it becomes very, it doesn't look that nice when we draw it, right? So on the H4, it might look nice, right? We're not taking the wick on the H4, right? You can see that we ignore the wicks over here, we ignore the wick over here, ignore the wick over here. But what happens on the H1 chart is that if you change the time frame, you notice that it becomes like this, you know, it just cuts right through and it doesn't look very nice, right? So that is the reason that when we are drawing, when we're doing technical analysis, when we're drawing trend lines, always include the wick, right? Because when you include the wick, no matter whether you're on the H4, you're on the H1, you're on the M5, you're on the M15, right? All of it will give you the same reading, right? But if you use no wick, right? No wick, you will get stuff like this where you have absolutely terrible example. Let me show you an example. Let me try to show you an example over here. Okay, I'm just going to load my chart. See. Let's see if I have an example somewhere that we can look at. One where there's a very big wick or something. Let me just check it out. Okay, let me show you the difference, right? So on the H4, you look at this. Let's ignore that wick over there. Let me find a wick. Okay. Now for this example, for example, right? So imagine if we drew like this line, and we catch this wick over here. Okay. Look at this wick over here. We caught it over here. When I change to the H1, to the M30, Oh man, I need to scroll back and forth. It's quite messy. Give me a second. I just drew it, but I can't find it. I'm going to do a bar replay. I'm going to show you exactly what I mean. Okay. Now look at this. It catches it perfectly. If I change it to the H1, it catches it perfectly, right? If I change it to the 1 day, it catches it perfectly at the bottom, right? If I change it to the 15-minute chart, oh, there's no data here, right? 30-minute chart. Is it 1 hour chart? Oh, because there's no data points there. Did I change my price feed or something? Just give me a second. Just give me a second. I think they, what I want to show you is that if you take an example, you catch the lows over here on the H4 chart, it looks nice, right? You're catching the closing price, you ignore the wicks. But if you change the time frame, like let's change it to H1, you can see that suddenly this doesn't look very nice, right? No one would draw a line this way and cut it like that, right? So on the H1 chart, it looks terrible, but on the H4 chart, it looks okay, right? That's why you need to always take the wick, because when you take the wick in examples like this, right, whether you're on the H4 chart, whether you are on the whether you're on the 1 day chart, whether you're on the 1 hour chart, right, let's go back to the 1 hour chart. You can see it over here. Whether you're on the 1 hour chart, it all catches the low perfectly, right? That is why you need to use the wick when you're drawing trend lines. Okay. Now, the next thing that I want to do, right? You notice that this tends to look slightly better. This tends to look slightly better than this. The only difference is the time frame that is being used. Okay, this is the H4 time frame. This is the H1 time frame. So sometimes if something doesn't look that clear on the H1 time frame, right, you're starting to see, you're looking at too granular data over here, right? There's nothing wrong with changing it to the H4 time frame or going one time frame larger so that you see the bigger picture, right? You notice this one, you're seeing a lot of granular data in between, which is not that effective, right? It's telling you the same thing. This and this, they are the exact same thing. Okay, just that this one uses a higher time frame and it filters out a little bit more of the noise. Okay, so this is a little trick that you can use when you're analyzing charts too. Okay, now this trend line, right? How many people want to take a guess? Is this trend line okay or is it not okay? This ascending support trend line, is it yay or is it nay? Is it correct or is it wrong? Okay, I see a couple of answers, right? Some saying are correct. Okay, let me share with you the answer here. Okay, Techno is also saying it's correct. It's wrong. Why is it wrong? Okay, because a trend line, a trend line support should not be decreasing. Okay, imagine you're a man, right? And you have a slope, and you're walking up a slope. It's very easy to walk up a slope, right? There is very clear support over there. But if you are a man and there is a slope down, you notice it's very hard to find support. You just keep going, and then you're walking down. If the slope is very steep, you end up just maybe tumbling down, right? Because it's very hard to find support when the slope is steep, right? As in it's sloping downwards. It's very easy to find support when the slope is upwards. You can easily go up. But when it's sloping downwards, it's a slippery slope. Very hard to find support. That's why in such a situation, right, whenever you see a trend line that is sliding downwards, right, stay out of it. It's very hard to catch a bounce when it's sliding down, right? Because you think about it, the overall momentum is bearish, right? If you look at that, price is making lower high, lower high, lower high, lower, lower. It's going lower and lower. As it is going lower, you already have the bearish momentum pushing it down, right? You already have bearish momentum pushing it down. And when you're trying to buy over here, trying to buy to go up, because you have bearish momentum pushing it down, it gives you a much lower success rate, right? Your hit rate usually is greatly affected, right? You have a much lower success rate of catching the moves correctly, okay? So that is an important consideration when it comes to drawing. Sorry, what's the? That's an important consideration when you're drawing trend lines. A supporting trend line should only trend line from the bottom, right? So if you have a trend line, it should only be from the bottom. That is what you're looking to catch: bounce, 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 bounce. Because you have the overall trend going up, it's easier and more effective to catch the bounces when your trend line is going upwards. Now, the same thing is true when you have a downtrend, right? You have a bearish trend line going downwards. That's where, as you can see, it's going downwards over here. That's where, it's easier when you have a descending trend line. So look at this case, we have a descending trend line. We have a descending trend line, but it is at the bottom of price, which is wrong. If the descending trend line is at the top, then it works. But if it's at the bottom of price, it does not work. Okay. So same thing here, it's descending trend line, dropping, dropping, dropping. Very nice, right? That is okay if it's on the top, right? So you're always looking for a trend line from the top if it's descending. Okay, important considerations to take note of, right? 2 trend lines is tentative. 3 trend lines is a valid trend line. So you got 1 trend, 1, 2, 3 touches. 3 touches becomes a valid trend line. Okay, so you can see how you have 1, 2, 3 becomes a confirmed trend line. 4 is where the nice little reaction happens. 2 is always called tentative because there are too many occurrences of trend lines having 2 touches. What do I mean by that? Right. So I just come here. If I were to use a trend line 2 touch every single time, right, there'll be too many of them, right? You can draw 1, 2. Okay, this is 3 touches. It's not bad, right? And you can see how there is like 1 touch here, 2 touch, 3 touch, 4th small little reversal over here, right? But if you use 2 touches, you can literally draw almost every single thing. Here to here is 2 touch, right? Here to here is 2 touch. Here to here is 2 touch, right? And it becomes a lot less effective, right? Here to here is 2 touch, right? So what you want to do is to minimally have 3 touches, right? Then you have this thing called a valid trend line. So at the 3rd touch, it becomes valid, right? Then you look to trade from the 4th touch. 2 touches is just too common, right? You can just literally take any 2 points and combine it together, it becomes a trend line. And when it's too common, it's usually not that effective. Okay, guys? Now, moving on to the next topic, right? Which time frame should you use trend lines on? Well, the answer to this question is that you usually use it on the higher time frame, right? So the higher time frames usually on the H1, on the H4, they do slightly better. Even on the D1, the 1 day charts, they work slightly better. On the smaller time frames, they don't work that well. Okay, on the smaller time frames, they don't work that well. So that is just the truth when it comes to using trend lines, or actually any form of technical analysis. All right, guys. Let's move on from here. There are a few things that I want to show you on how you can improve your setup. Okay, so when you're drawing trend lines, for example, the first thing you do is you load up the Ichimoku cloud. To load up the Ichimoku cloud, right? Usually when you load Ichimoku, right? I'm going to show it to you here. Usually you have all this, okay? You have all these things, which is very, very messy. What you want to do is to edit it, and you want to remove everything and just leave the cloud. Just leave the cloud. The cloud will give you a good enough gauge on the momentum of the market, okay? The cloud itself is a good enough gauge on the momentum of the market. So in this case, we just draw a nice little cloud here. Notice that the cloud prices tend to respect the cloud quite nicely, okay? Now, after you use the Ichimoku cloud, then you add in a trend line, right? So we got a nice little trend line over here. Not only do we have a nice trend line, we also have a nice 38% Fibonacci retracement from here down to here. Not only do we have that, we notice that each time price reverse, it was close to a 99%, right? Reverse once, reverse twice. The reversal happened on the 99%. So we got 4 reasons. You got trend line, we got cloud, we got 38%, we got stochastic, all of it leading to a very nice example of price dropping very nicely. Okay, so that is the important, that's one of the tricks when it comes to technical analysis, right? You don't want to be using just one single trend line to trade. You want to combine it with multiple things together to give yourself the highest chance of being a profitable trader. Okay, you can imagine that maybe if you have the Ichimoku cloud by itself, you have a 30% chance of being correct. You add in the trend line, you got a 20% chance of being correct. You add in the Fibonacci, you got maybe a 10% chance of being correct. You add in the stochastic, you got another 10% chance of being correct. By itself, right, is not going to be effective, like a small chance. But you combine it all together, what do you have? You have a 70% chance of being correct. It's only effective if you combine it all together, right? If you just trade it individually, that's often a little bit too weak, right? So that is the trick to a lot of these trading strategies, is combining multiple factors together to give yourself the highest chance of a profitable trade. Okay, now let's show you some live examples. Okay, I'll show you some live examples of the setups that I evaluated, how I broke it down, and why, how you can apply it in your trading. Okay, if you have questions regarding this, or you want me to look at some other charts or some other instruments, you can let me know and I'll take a look at them. All right, now let's look at this setup over here. So if you, this is the link, right? So each of this, oops, how do just give me a second. I think I have, I need to go back to my slideshow again, sorry. Okay, I'm back here again. Sorry about that. Right. I just wanted to show you a link. It seems like when I click the link, I'm not sure where it loads. It doesn't seem to load. But it's okay. Oh, it does load over here, right? So this all of it is timestamp. So this was posted on the 7th of April. Go back to another session of using technical analysis to find it. Yeah, this was posted on the 7th of April. So you can see towards the analysis, what we did for the analysis is really simple, right? There was a annotate. Actually, I'm going to just show it to you over here. You can see over here, I'm going to draw, right? There was a trend line, 1 touch, 2 touch, 3 touch, 4 touch, breakout, right? So the trend line broke out. There was a descending trend line that was pushing prices down. There's the Ichimoku cloud over here. So you can see Ichimoku cloud, and price broke this very nice resistance level. Okay, so price on a pullback resistance, it broke a key ascending trend line, which is this one. It has a bearish trend line that is pushing it down, as you can see, a nice little bearish trend line pushing it down, and it's below the Ichimoku. Although it's not as strong, but price is below the Ichimoku. So we concluded that price will drop to the next key level, key support level over here. Okay, what has happened since then? You can see that price dropped perfectly to our target over here. Okay, so this is an example of applying technical analysis to trading, right? Especially playing the trend line breakout, because the moment price breaks out of this trend line, right, it starts to feel very bearish. You throw in the bearish momentum, you throw in the Ichimoku cloud momentum, you have enough momentum to push it down to the next key support, right? So this is one example. I will show you more examples. Let me just show you another example over here, right? So in this example, price broke out of a channel, right? You can see nice little channel. Requirement for channels is that you must have 4 touches. You got 1 touch over here, 2 touch over here, 3 touch over here, 4 touch over here, right? 1, 2, 3, 4. Price broke a nice overlap resistance turn support, right? So you can see that there was this nice little resistance turn support, right? So price broke out of it and it's coming back down. right? And this was the level where it kind of broke out of the channel too. So you got two of it. Price then broke a 23% retracement. You can see a Fibonacci retracement over here, 23. So whenever price breaks a 23% retracement, the next level that it likes to go up to is the 38% retracement. Okay, so we believe that it go up 38% retracement and price cross over the Ichimoku. If I'm not wrong, the Ichimoku was over here when we drew this example. Okay, you can see how four things all lining up very, very nicely over here. And what happened, right? You can see we are going to call for this bounce up to here. You can see over here, price bounce up very, very nicely to our overlap over here. All right, so it's a very, very nice setup, very, very high probability setup, right? So each of these, right, this could have been a 30% chance of being correct. This could be 20% chance, right? This could be 20% chance, right? This might be 10% chance, right? So by themselves, they're not good, but you combine them all together, right? You combine them all together and you have maybe 80% chance of being correct on this setup. Okay, I'll show you a couple more examples, right? And remember, guys, if you have any questions at any point in time, just send it to me and I'll be more than glad to answer them. This is another example that we're looking at. So this is a continuation. This was a super duper duper nice setup. Okay, so you notice that there was price is testing a bearish channel resistance. Why is it a channel? One touch, two touch, three touch, four touches. Actually, about 5 touches, right? We got 1, 2, 3, 4, 5 touches. Price is testing a pullback resistance, right? 1. This is a pullback resistance over here. What does a pullback resistance mean? You can check out our previous webinar on that. Okay, price is below the Ichimoku cloud. You can see that the cloud holds prices down very nicely, hold price down very nicely, and price is right at the Ichimoku cloud over there. Price is testing a short-term 38% retracement over here. Price is testing a longer-term 23% retracement, starting point here, ending point here. So there are a lot of reasons why this is a very strong level. So we are going to call for prices to drop from this level. Now, what has happened since then? If you scroll down, you can see how price dropped very, very nicely, right? Touch a level and it dropped very, very nicely to our take profit target, right? So you can see, we're calling for the drop to the next pullback support. That's exactly what happened. So we played it back to this pullback support over here. That is enough to make money. Okay, that is enough to make money if a good 1:1 risk to reward kind of setup. Okay, this is another example. This is another example we have, right? Notice trend line, 1 touch, 2 touch, 3 touch trend line. Price broke out of this trend line. Okay, price broke out of this trend line and it crossed below the Ichimoku. You can see it crossed below the Ichimoku over here. Very importantly, right? This is why I like this trade is because not only is there a bearish exit. This is an example of price being bearish, but if you look at the bigger trend, right? There's a very, very nice bearish channel that is still loading on so much pressure to continue to push prices down, right? To push prices lower. So you got very, very strong bearish momentum over here, right? You cross below the Ichimoku and you broke an ascending support. So we're looking to play it down to the next big support over here. And very nicely, you can see how price, it broke that level, come down, touch our take profit, right? And, it bag us out now, bag us a nice amount of pips for our profit. Okay. Now guys, so this is the setup, right? I want to create a little bit of a checklist for you guys, right? The checklist is very simple. The first thing is, what happened to trend line? The trend line, did price break out of a trend line? The second thing you need to look out for is the Ichimoku. Okay, did price also break out of the Ichimoku? Third thing you need to look out for is the larger momentum of the market. What do I mean by larger momentum? Right, you have this as the larger momentum as an example, right? Is it in your favor or not in your favor, right? Is it using a channel? So could it be a channel, right? Or could it be a big Ichimoku cloud? Or could it be a big moving average, like maybe the 100 or the 200 moving average? Okay, so once you have those three things, then you must see, did it break a key support level? So support and resistance level, you need to see if it broke a key level, right? Then lastly, you can see whether it broke a nice Fibonacci. If it did, even better, right? It broke a Fibonacci, it should trigger. If it broke the 23, it should go down to the 38. If it broke the 38, it should go down to the 50. If it broke the 50, it should go down to the 61.8, and it goes on and on, right? But you just need to know how to draw Fibonacci correctly to use this effectively. Okay, and if you have this thing checked off, checked off, checked off, checked off, checked off, checked off, is a very, very high probability setup. You're going to look at your take profit. For your take profit, look at the chart and play it to the next key level. Why do I play it to this level and not this level over here? Is because this is a big level. Price bounce over here, and since what? Since 2017 or 2018, price has not came back down to that level. So it's about 5 years since price came down to that level. It would be foolish of me to just want to play a move beyond that. You know, this move here is enough for me. Okay, so the tighter you keep your stop loss, you know, the more profits you can make, right? Because of the better risk reward kind of setup that you have. Okay, guys. Now I do want to show you guys a couple of things. If you have the time, please try to tune in to that. Right, you can head to this site called vip.infx.com. I'm going to show you the registration process, okay? Because, because a couple of people are wondering how to register. vip.infx.com, if this is a site you want to go to, when you go there, you'll be asked to click this thing, join IronFX server. Okay, if you try to access any of the stuff by the site, I think it's all blurred out, so you can't really see it, right? So you can click join IronFX server, click register. Okay, so we're just gonna come up with a random stuff over here, right? We're gonna come up with a simple username, right, and the password. Now, when you click register, I'm going to show you the process. You need to agree to the disclaimers, as you can see over here, right? You can disable that. Join server. Now, you notice that when you join, there's nothing here, nothing that you can see. You must click on this thing called request access. When you click on request access, they say, please attach proof of your IronFX live account to get access. Click request to join channel. Please let me in. You can upload your files, right? So maybe we upload the simple picture of ourselves, maybe diamond hands. For those of you guys know what diamond hands is, it's diamond hands. Send in request. Okay, so once you send in the request, right, you can see that your request is pending approval. What happens is that on my side, I can just come in here. I can look at request management and I can see, okay, this guy has requested access, right? What has he attached? Diamond hands, right? This is proof of his live account. I will accept it. I'll give you a nice role. And once I give you the role, right, this is where you can get access to it and you can see all the different channels by the site. And this is a place where you can start asking questions, right? So imagine you're looking at this and you're wondering, okay, euro dollar, do I sell from here? You can say, hey, @mention, hey, Desmond, do I sell from this level? What level are you referring to? You just need to highlight the text. Click this button called link object to text. Select whatever you just drew. Click confirm and send it through, right? So imagine I come back here, right? I come back here and I see that someone has asked me a question, right? Someone has asked me a question. Hey, do I sell from this level? What level are you referring to? All I need to do is to hover my mouse over it and you can see it lights up on the chart. So I know, oh, okay, this is the exact level that you were referring to, right? And that is where we can help you become a better trader, right? Because I can just come in here, it's like, okay, awesome, give you a nice little thumbs up. Come in here and I say that, yeah, it looks like a nice level. And it also, right, it also seems to line up with the 61.8, right? That's why I can say it also lines up with the 61.8 retracement. Same thing, highlight this text, and I can even select the exact retracement that I'm referring to, send it through. how it looks like is that when you hover your mouse over it, you can see this is the exact tool that I was referring to. Okay, guys. This is a really, really nice, simple way that you can register for the VIP room, right? And it allows me to actually guide you better to be a better trader, right? So anytime you got questions, just send it through. All you need to do is to have a live IronFX account to get access to this. Okay, guys. Now, I do want to show you one example on crude oil on the daily chart, which I think it might be you guys might be interested in. Was it crude oil? Oh, it could have been crude oil. Yes, on the daily chart. This could be a nice setup for you guys to look at, okay? This is what I mean by applying what we've learned. We draw a trend line from here until here. So Techno is asking how to have a live IronFX account. Just go to ironfx.com. This link here, copy link address. Register for it over here. And you can get a live IronFX account. Okay. Now, anyway, back to this. Yeah. So please, if you have the chance, please just go get that, get access to the IronFX VIP room, because I believe, I'm not sure when, but they'll be increasing the entry requirements in the future. For now, all you need is an IronFX account, but maybe in the future, you know, you need to put in like a couple, like $10,000 just to get access to it, right? So if it's in a promotional stage now, so go register for an IronFX account if you don't have one, just to get access to this. Okay, once I give you access, no one can take that away from you. So this is an example of applying what we learned today. Trend line, 1 touch, 2 touch, 3 touch, 4 touch, 5 touch. 5 touches here. So this is a valid trend line. Okay. Price has since broke out from the trend line. So we're expecting it to maybe drop down. Okay. So what do we do once we have identified this? We throw on the Ichimoku cloud and we notice that price is crossing below the Ichimoku cloud. If it drops here, right, it will actually cross below the Ichimoku, which is a very nice thing. Okay. What is the support level that it needs to break? I am a little bit wary about this support level, right? We can see that price bounced off very nicely from there previously and is right there again. So we need price to break this level to trigger the move down. I believe that the next big level that it would probably drop down to is over here, right? This could be the next key level that it might drop down to. Okay, but first and foremost, it needs to break this key level, you know, trigger the move down. All right, so yeah, these are some things that you can take note of, right? That it's when you're doing analysis, it's very easy to find trend lines. You find a trend line, you throw up the Ichimoku cloud, you throw up the support and resistance levels. See, this is what I call a downside confirmation, meaning that we need to wait for price to break this level before prices go down. Okay, it's a setup which I am also watching on myself. Now, guys, we got a little bit of time here, right? I'm just going to open the time to the floor. Is there any questions you guys have, or is there any particular market or instrument you want me to take a look at? Okay. Let me just pull it back to this level. All right. Yeah, so I hope that this webinar gave you a good idea on how to apply trend lines, you know, how to apply channels, right? Along with all different live examples, you know, how you can apply it better to your trading. Creating a nice little checkbox system. You got trend lines, you got Ichimoku, you look at the larger momentum, right? You look at which is made up by the channels, the Ichimoku, the moving average, right? You can look at support and resistance as a key trigger. Look at Fibonacci too, which we'll be covering in the future webinars, right? And if you combine all of it together, right, that's where you can become a better, that's where you can decide whether it's a nice enough setup, right? Kingsley, how can you learn FX as a professional? First, you can learn it from us. Secondly, I believe one of the places that you can go to, is it here? Yeah, one of the places that you can go to in the IronFX room is the IronFX school over here. So this is a great place for you to really learn stuff, right? I would start the webinars. a little bit of the podcast. I also create a podcast that you can look at, and the VIP room will give you the guidance, right? Because you can learn, but if you apply it wrongly, it is equally bad. So you must learn and apply it correctly, right? That's why jumping onto the VIP room is a great place where you can practice what you learn, and you can ask questions to professionals. Because if you ask questions and you're asking it to other people who might not know their way around, then you might be learning the wrong stuff, right? So that's one thing I want to encourage you guys to do, is that don't just learn, you must practice. Where do you practice? In the VIP room. As long as you have an IronFX account, you can get access to that. Just go get access to it faster. All right. Now, we are coming up with IronFX Academy soon, right? We are putting in the content soon. Hopefully I'll get it out to you guys in the next 1 or 2 weeks, and I'll have another place to direct you guys to learn how to trade better. Okay. Now, if no one has any other questions, right? Thank you very much for tuning in to today's session, right? I hope you really learned how to apply trend lines, channels, support and resistance, combining them together to play breakouts, to play continuations, right? And you know where to find me in the VIP room. Otherwise, please register for tomorrow's live webinar. I'm going to give you the link over here. Tomorrow's live webinar is a live trading session, right? I can show you, it's a live trading session over here, right? Pretty fun time where I will actually show you guys some of the calls I'm making live, right? And you can trade them together. We have a pretty high hit rate of 70 to 80%. So, if it works out well, that'd be great, right? Yeah, but join me tomorrow in tomorrow's session, right? Otherwise, thank you very much, guys. Stay safe, trade safe. I will catch you guys again tomorrow. Okay, thank you, everyone. Right, I can see a couple of you guys saying bye. Right, thank you, Kingsley. Thank you, Techno. Thank you, Natalia. Right, thank you, everyone else. I will see you guys either tomorrow or next week. Okay. Adios. Bye bye.
Carry trade refers to the trading strategy with which traders sell a currency at a low interest rate and invest in another asset that has a higher rate of return. In forex trading, interest is debited or credited daily from a trader's trading account based on open positions. Now, let's say that the US interest rate for a deposit is 2%, while in Europe is 0%. If the rate for the Euro-USD pair remains stable in the following year, those traders that are aware of this would borrow funds from Europe but make a deposit in the US. This way, they would benefit from the difference in the interest rate, that is the 2% risk-free return. This type of trading method, where money is carried to another location, is called carry trade. In fact, did you know that selling JPY while buying AUD, GBP or NSD has been the most popular carry trade for the past few years? Taking another example, if traders want to borrow 1 million euros to carry the US with an interest rate of 1.10 for Euro USD, they would actually be depositing $1.1 million in the hope of receiving back $1.122 million next year. Assuming that the interest rate remains the same, the trader would get back 1.2 million euros, hence a 20,000 euro profit. However, since exchange rates usually change, if the exchange rate changed to 1.11, the trader's profit would then be reduced to 10,800 euros. In any case, carry traders are not an easy endeavor, but rather a high-risk strategy that requires traders to have years of market expertise and solid risk management techniques in place. Stay tuned for more.